Hi there, guys. Welcome to Midweek with Indiacharts. This is your host, Muskan Kapoor, and I'm joined with Jay Vora. And we are here to clear your questions that you all have had for this entire week. So I will just quickly get started. My first question is related to Bank of England. So we had seen some tightening going on in their quantitative area, but we have seen them sort of pivot, and there's a lot of cheer happening. People think it will settle down and then loosen a little bit. I want to know more about this.
So yes, so that was a surprise move from the Bank of England, wherein they announced that they would now start buying bonds and basically come to the path of quantitative easing. So just few months back, they were supposed to do quantitative tightening to fight the inflation, but just in few months, it seems like the system is broke and they have to take this drastic steps. So the news over there that was floating around was many of the pension funds, they might have gone blown up if this step wouldn't have been taken. So that is how fragile the system is. So while the markets are cheering that maybe everyone will now follow the path of fiscal, this quantitative easing, but I don't think that is likely to happen in US because you know uh, at most part of 2021, they were telling that the inflation is transitory, and it ended up, blowing in all the commodity prices, and the inflation went out of hand. So if at all, the Fed has to do that, then it might surely lose its credibility. So I don't think that is going to happen over there. So what had happened yesterday was the market cheered and thought that every central bank would start on the path of fiscal easing, and you might again start getting liquidity in the system. But I guess that is still some time away until Fed eventually pivots and Fed himself tells that uh, that's it, and we are going on the path of fiscal easing. Because even in the last two announcement, whenever the Fed did say, okay, that we are going to raise rates, the market participants kept on thinking that the Fed will finally pivot, but that never happened. And they stuck to their guns because it seems like they want to fight out inflation very seriously. And because they had this bad experience in 1980, wherein they loosened a bit, and then again inflation shot up and they had to take very drastic steps. So this time around, they would be very cautious about it, and until the battle is not won, they might continue to be on the path of fiscal tightening. That is, we call it as quantitative tightening. And that is why I think the rally in the markets today, especially in the emerging market, was short lived. That is because if you see Nifty Index, it eventually gave up. I think all the emerging markets, they gave up most of their gains. In fact, I think Hang Seng ended in red. So while in the morning it looked a very cheerful market, but that did not happen by the day end, and almost everything, I think, sold off or cooled off significantly from the day's high.
Yeah, so as you said, we have to currently look at what Fed says to make a strong statement as to if we should cheer or not. And you also spoke about the Indian market. Talking about that, tomorrow we have the RBI meet. What can we expect in that? What is going to happen and what's likely to happen, basically?
So frankly, RBI is in a very difficult spot right now because I don't think inflation is much of a problem in India. I mean, it is a little high, but it is not so high that it is alarming, or RBI has to take any drastic steps. But what is happening is that Fed is raising the rates now to attract the FIIs and keep them invested in India. RBI will have to keep the interest rate attractive such that the FIs remain, interested and invested. So because Fed is raising the rate, RBI will have to raise the rate irrespective of what is happening in the domestic market, whether inflation is high, low. Because I think until the previous meet, the expectation was that they would, hike somewhere around 50 basis point by the year end or something like that. And then they will cut it off. I mean, then they won't move much beyond that. But now there are increasingly risk and statement which I heard from many of the analysts that there could be two hikes of 50 basis point. Now what will happen in this case is that if the RBI hikes the rate, okay, so because nowadays the loans are linked to the are repo linked. So those get passed through the customers very quickly. Okay. So what will happen is that the tenures of the EMI and all will go up. Okay. Which might eventually make, sort of a bad feeling for the customer. And people in general who are having loans, and it might, to certain extent dampen the sentiment. So the problem with RBI is that if they raise the rates, then the domestic market might get hurt. If they don't raise the rate, there can be a significant, selling pressure in the debt market, which might result rupee going higher. So RBI is in a very difficult spot right now, and it needs to be seen how RBI tackles this situation, and what basically the commentary would be. Most of the people I heard are saying that RBI won't change the inflation forecast, nor will it change the growth forecast, but there is a chance that they might inject liquidity, because we are facing some sort of liquidity challenges in the market. So that is something that will be watched out for. So there is a very, very remote chance that that the RBI actually does just a 35 basis point hike. That I think is not a consensus, but that is something I read, and very few of the analysts are expecting a 35 bips hike or something of that sort. If that happens, that might lead to some cheer in the near term. But again, like I said, that if the Fed is going to hike, RBI will eventually have to follow, irrespective of what the domestic economy is saying, just to keep the debt market attractive and save rupee from sliding.
But yeah, while I move from how the RBI firstly decided about how the world will be, how RBI will be, now we'll come to our own circle. Tomorrow is the weekly, monthly, and quarterly closing of the market. How is it going to close? Do you have any idea? What do you think?
Yeah, so we have to have an idea. So I'll quickly share the chart.
Yes.
So I'll move to the Nifty Index. Sorry. And take up with the averages. So yeah. Sorry. So if you see for the Nifty Index, what has happened now is that on the monthly chart, you can see that there is a big red bar that is now, we
Correct.
are going to form, which would mean that, people who follow us would know what the importance of color change would be. So as I had been highlighting a while back as well, that, so wait, let me change the color. So yeah, so people who might be knowing the importance of color change would know that on the monthly we are staring at a negative close. So I had highlighted earlier as well that we would start looking out for retracement levels once this trend line was broken. So now that this trend line is broken, we have started to look for the retracement. So far the Nifty was consolidating around this 38.2% mark, but it has now broken. So there is a scope and there is a chance that we might test the 50, the 50% retracement mark of the entire rise. But one more development, which we had highlighted to our subscribers as well, is that, there has been this double top breakdown. And if I just simply go by the double top breakdown levels, so that now comes to around, around 60 to 75, okay, which actually, if you see, is the 61.8% retracement mark, okay, which is somewhere around this. So there is a chance that, we might see a 50% retracement and then see a pullback and retest this breakdown point, and then we start correcting. Okay, there is a distinct possibility that this can happen. But given that this double top breakdown has occurred, this doesn't bode well, especially in the short term. And the most important thing I think which people should be looking out for is that the RMI indicator, which is a proprietary indicator, so that is in a sell mode. Okay. All this while we were holding above the 20-month average, and that is why there was no major sell-off, you can say, that has occurred in the market yet. But if this were to be broken, okay, the next level then would come to the 40-month average, which is around the 14,600 mark. So people may or may not be, mentally prepared for this, but this is one possibility which people should think of if the monthly averages were to be broken. So I think, in this month, given that it is tomorrow itself, I'm not too sure if we might, break this level. But at some point of time, especially if on the daily chart or the weekly chart, if you see the 61.8% retracement mark, which is around the 16,300 levels, if that were to be broken, then eventually you might see 20-month average also getting broken on the monthly closing basis. So there is a chance that it can break during the month and it can end above that. But I think if 16,300, 16,250 sort of level is broken on the downside, this might not bode well. And the other important thing, which people might have understood by now, is that this has turned out to be a false breakout. Now, false breakout generally occurs in when there is a corrective pullback and when the major trend is on the downside. That is where you will see generally a breakout, because if you see over here, many people anticipated that this is a breakout. Okay, it rallied for 2-3 days, 4-5 days, and then it again faltered. Something similar has happened over here as well. So we are at a very crucial juncture, as I should put out. And maybe from the intra-week basis, 16,300 will be important, but any closing, I think, below the 20-month moving average, which is at 16,525, would not bode well for the markets. And in fact, I would just briefly touch upon the US indices. Many of the people are saying that, the June low, it is very near to that.
Yeah.
And there can be a big bounce or there can be a big reversal. But all the people who know about Elliott wave and are following us, they know that we have, marked this wave as a 5-wave decline. The previous wave as 5-wave decline. And if the next 5-wave decline has to occur, then it might be very much on the downside. I mean, it might not just end below the low of wave A. Okay, wait, let me just, show you the chart quickly. So, yeah. So, like I said, that this entire thing was wave A. Okay. This entire thing was wave A. And if wave C has to occur, it would be the equality of wave A, which would then come somewhere around 27,500. So, so far it is going as per anticipation. Okay, like we had anticipated and like we have been telling, on this channel, right, how it is. Because, generally people don't like to hear, bearish things, but we have been speaking what we are seeing on the chart. And this is what it looks to us right now. So, and one more important thing is that it is not necessary that it will stop over here. Okay, there is no reason why it cannot extend. So these are the possible risks we are seeing right now. And like I mentioned for the Nifty index as well, if 16,500 sort of levels are broken on monthly closing basis, it might not bode well for the Indian indices as well.
Correct. Makes sense. I remember last week, I'm just calling back last week that we were discussing because we did not know if Nifty would break downwards or upwards, and we were so confused as to
Yes.
what will
So
happen.
yeah,
And
so on that
immediately the
front,
next
yeah,
day,
finally, yeah, so on that front, finally some clarity has occurred,
yes,
and the word decoupling, which people were using, very loosely. So,
hmm, that has
that
come
has
into reality
finally,
and it's not existing.
and that
Yeah.
has finally, at least, now I'm not hearing that word that India is decoupled. Earlier,
Hmm,
I saw a
yeah.
lot of articles based on that.
Everywhere. Yes. So yeah, that doubt has been cleared. Now we will see what RBI has to say tomorrow. And we'll probably meet next week and discuss how that week looks like. Thank you so much for your time. Thank you.
Thank you. Thank you.